the Bitcoin's IRR for the last 15 years is compounded annual growth rate is 45%. Yes, it's volatile, but that means if you're investing in houses and you have 8% return, you're losing 37% a year against Bitcoin. So, but you think you're winning because you're winning because somebody else is losing money against houses. So you think you're winning, but you're actually losing. And so why that's going to be chaotic is most people don't understand. So Bitcoin is the only thing that's decentralized and secure.
For the past 15 years, Bitcoin has consistently outperformed traditional assets, compounding at an annual rate of 45%. Yet, within the current financial system, many investors remain unaware that their perceived gains are actually losses when measured against a harder form of money like Bitcoin. While real estate and equities appear to appreciate, their value is being silently eroded when compared to an asset that operates outside the constraints of inflation and monetary manipulation. The illusion of wealth accumulation within the legacy financial system is sustained by a framework that distorts true value. Assets like real estate and stocks may generate positive returns in nominal terms, but when measured against Bitcoin, a scarce, decentralized, and incorruptible monetary network, their purchasing power steadily declines. A system built on ever-expanding debt can sustain the appearance of prosperity, but it cannot compete with an asset that is governed by absolute scarcity. Bitcoin is not just another investment. It represents a fundamental shift in how value is stored and measured. Unlike traditional assets, which remain tethered to the fluctuations of credit expansion and central bank policies, Bitcoin functions as a decentralized benchmark for economic reality. Its continued rise is not a speculative anomaly, but a reflection of the market's gradual repricing of all assets against a monetary system that cannot be inflated away. In a recent interview with John Furrier at the 2025 Forward Global Summit in Los Angeles, Jeff Booth, a renowned entrepreneur, author, and Bitcoin maximalist, lays out a radical yet undeniable truth. The natural state of a free market is deflation. Technology is making everything more efficient, which means prices should be falling. But they're not, because we don't live in a free market. We live in a credit-based system that requires inflation to survive. This means your wealth is being silently stolen, not through taxation, but through a hidden mechanism that most people never question. Booth's insights expose the structural imbalance at the heart of today's financial system and illustrate why Bitcoin is reshaping the global economy. As we bring you clips from the interview, please watch, like and share this video, subscribe to the channel, and turn on post notifications for more videos. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
The thesis is pretty simple, and I think most people can see this in themselves. The natural state of the free market is deflation. And we know that's true because we only use things that provide us more value, and an entrepreneur has to create more value to survive in the free market. So if we use things that give us more value, an entrepreneur has to create more value, then the output of that has to be deflation. In fact, what you're doing is touching a whole bunch of people you couldn't touch with a one-man show right now because you can go direct because of technology. Yeah. So that's a massive productive force, and it's everywhere in our world. And so what that means is prices should be falling everywhere. If you live in a free market, they should be falling at that rate everywhere. And you should get richer and richer and richer, even if you didn't work, as other people work for you and the natural course flows. But we don't live in that market. We live in or most people don't, because they live in a credit-based system.
They think it's free.
Yeah, they think, so in other words, think about this. We've never lived in a truly global free market. We've lived in a control system masquerading as a free market. And from the control system, because the control system is based on debt, and I'm not saying bad people on this, I'm saying a credit-based system can't allow deflation, because a credit-based system would collapse completely. So that credit-based system has to steal the money that should flow to you through deflation, plus inflation, to constantly create more monetary units to make you believe prices go up. And you're inside that system, and everybody's inside that system, making it stronger with all their actions. So you ask yourself, what would it look like if you had a decentralized secure protocol bounded by energy Bitcoin, the first ever decentralized secure protocol bounded by energy, what would it be pricing if you couldn't change it? And it would be pricing perfectly the global free market. So measured against Bitcoin, prices of everything are falling. It appears to be rising because people are converting Bitcoin to their piece of paper to then measure Bitcoin price. But if you actually realize what is happening is, my house was 300 Bitcoin 5 years ago, my house is 22 Bitcoin today. Energy prices are falling, all prices, and as long as Bitcoin stays decentralized and secure, and when you really understand it, you know it will, it's the only thing that will, it will reprice everything else over time. The Bitcoin's IRR for the last 15 years is compounded annual growth rate is 45%. Yes, it's volatile, but that means if you're investing in houses and you have 8% return, you're losing 37% a year against Bitcoin. So, but you think you're winning because you're winning because somebody else is losing money against houses. So you think you're winning, but you're actually losing. And so why that's going to be chaotic is most people don't understand.
So that's rationalization of that.
It's a rationalization. Just like if you were in Argentina, people look at Argentina as their currency got totally debased, going, why didn't they understand? When they're doing the same thing in the US today.
Yeah.
And so
they gotta get out of the system.
Bitcoin is the only thing that's decentralized and secure. And I'm saying I'm not crypto. I think, and it would get really confusing as well, because you wouldn't think protocols are winner take all. And the internet's a protocol, and they come in layers and add more functionalities. Technologies are the next technology beats the other technology, and winner take most. So we think in terms of technologies because we don't see protocols very often. There is only one internet. Yep. Right? You choose to be on it or you choose not to be on it. There is only one Bitcoin. You're going to be choosing to be on it or not be on it. And if you don't choose it, you're going to get repriced to buy it. And it's developing in layers, and there's more and more functionality building in layers. In fact, at Ego Death, that's what we're investing in. And we're investing in, and if you saw what was happening and the rate of growth all around the world, you'd be very inspired.
During the interview, Booth also discusses a popular issue that new and prospective investors encounter with Bitcoin: self-custody or custodial services and ETFs. As Bitcoin adoption grows, so does the debate around the safest way to hold it. Institutions and custodial services offer convenience, but history has repeatedly shown that trusting third parties with your Bitcoin comes with significant risks. The collapse of major exchanges like FTX is just one of many examples of how centralized entities can fail, leaving users without access to their funds. Booth highlights a fundamental trade-off: ease of use versus true ownership. Many people have been conditioned to believe that financial institutions can be trusted with their assets. But Bitcoin is designed to function outside of the traditional system, providing a level of financial sovereignty that is impossible with custodial solutions. Every time you store Bitcoin on an exchange, you are effectively relinquishing control, exposing yourself to counterparty risk, and undermining one of the core principles that makes Bitcoin so valuable. Self-custody is not just a technical preference, it is a fundamental pillar of Bitcoin's purpose. It ensures that no intermediary can freeze, seize, or manipulate your wealth. While holding Bitcoin in self-custody requires education and responsibility, it also grants the ultimate form of financial freedom: direct ownership with zero reliance on a third party. As Booth explains, learning to manage your own Bitcoin securely may seem daunting at first, but the long-term benefits far outweigh the initial effort. The ability to hold an asset that no bank, government, or institution can control is a revolutionary shift in financial history. And as more people recognize this, the demand for self-custody will only continue to grow. Let's get back to the video to hear more of Booth's insights on Bitcoin.
So I reduced this down to first principles. And the decentralization security bounded by energy is the innovation. So if you and all of the other blockchains either have to lack security or be centralized. So the hack on the exchange with Ethereum last week, that they actually had a talk about rolling it back to take it back, tells you it's not It's not decentralized. You couldn't do that with Bitcoin. There is nobody to
Can't roll back. There's no resilience.
So when
it's
somebody
exactly, it's already secure.
It's bounded by energy. It's secure.
You say bounded by energy. Describe that for the folks who heard that. What do you mean? It's bounded by energy.
So because of proof of work on how it chases abundant energy and it sources and you have to do the work to mine Bitcoin, find that holds it to energy. Right, so it puts a floor of energy, which is actually our new operating system for the world, and so that bounded by energy, you can't change that.
Energy, you mean power?
I mean electricity, power, all of the compute that goes in. The way the compute works to mine this is the number one cost in mining Bitcoin is the energy. So it chases energy all over the world, low cost energy, to be able to make make the economics work in Bitcoin, and that further decentralizes it. And then the nodes that audit the rules make sure those rules are followed. So that bounds this thing to energy. If you just walk through, if Bitcoin made a choice, or the design choices wouldn't allow it to scale on layer 1. That's what keeps it decentralized, secure, bounded by energy. But it couldn't scale, 5 to 7 transactions per second. And so what people think now is, and then if you were just in this world and Bitcoin was repricing you and it appeared to you everyone was getting rich in Bitcoin, but it was every 10 minutes just repricing the world, right? And it appeared to you, then it would make sense, I'm going to create a better Bitcoin, right? And the free market would there's 11 million coins right now, right? And there would always be new ones because we fall into a trap of a better thing, right? And so how do you create a better one? If you create a better one by centralizing, you have to ask yourself a pretty simple question. Why, if you're going to centralize, wouldn't you just use a database instead of a high-cost database? Right? Yeah. You wouldn't use a blockchain to centralize. I know, but you wouldn't use a blockchain to centralize. Yeah. So what ends up happening is Bitcoin then develops Lightning Network and Liquid and other layer 2s that right now, most people don't know this, touch 650 million people in the world that are transacting on Bitcoin all the time. 650 million, it's growing, layer 2 is growing faster than the internet was growing in the 90s. And people don't even realize that it does all these transactions.
Jeff Booth's analysis underscores why Bitcoin stands apart from traditional financial systems and alternative blockchains. Unlike centralized assets that can be manipulated or diluted, Bitcoin operates on a decentralized network, bound by energy through its proof-of-work mechanism. This fundamental structure ensures that Bitcoin remains secure, resistant to control, and immune to the failures seen in other financial and crypto systems. While some argue that Bitcoin's base layer cannot scale, Booth points out that this is a deliberate feature, not a flaw. Instead of compromising decentralization, Bitcoin is scaling through layer 2 solutions like the Lightning Network, which already facilitates transactions for hundreds of millions of people worldwide. The rapid adoption of these second-layer technologies mirrors the early growth of the internet, an evolution that is often overlooked. Most importantly, Bitcoin is repricing the world. Booth emphasizes that its long-term performance, with a 45% annualized return over 15 years, exposes the hidden depreciation of fiat-based assets. What appears to be rising home and asset prices is, in reality, the steady erosion of purchasing power in legacy financial systems. This shift, though not always immediately recognized, is accelerating. Bitcoin is more than just an innovation in digital money. It represents a restructuring of the global economy. Booth argues that as its adoption grows, it will continue to challenge traditional financial models, forcing individuals and institutions to confront an unavoidable reality. Bitcoin is changing the fundamental rules of money, whether the world is ready for it or not. Please share your thoughts on Booth's insightful analysis of Bitcoin, the pitfalls in the global financial system, and how this technology is helping to fix things. Also, if you found this video helpful, don't forget to like, share, and subscribe for more deep dives into the cryptocurrency market and the financial system. Thanks for watching.